Welcome back to Alpha Recap. Glad you could join us. We're wrapping up the trading day and unpacking the big themes that moved markets after the close. As always, if you have questions, you can reach us at stockalpha.ai and ask us directly.
Thanks. Big day. The Federal Reserve and the optics around AI Capex really dominated the tape. Quick note, markets closed with yields and the dollar higher, and we saw a rotation between cyclicals and defensives as investors digested the Fed's message.
Right, so what really stands out here is Fed Chair Jerome Powell saying that the near-term build-out of data centers and AI infrastructure isn't automatically disinflationary. That was the key catalyst today.
Exactly. Powell explicitly warned that heavy spending on servers, networking, cooling, and power could add to inflationary pressure, and that this capex wave might keep policy tighter for longer. Analysts immediately picked up on that framing.
I mean, when you step back and look at this, linking a structural trend like AI directly to cyclical monetary policy changes the conversation. If hyperscalers keep spending big, that raises demand across semiconductors, materials, construction, and energy.
Yep, and sell-side shops like Goldman Sachs and JP Morgan quickly pushed out their rate cut expectations after Powell's comments, which is why we saw yield curves repriced and term premia creep up.
So that's the macro lead. Let's step into the tech supply chain angle, the other big storyline. At the Optical Fiber Communication Conference, there was a notable technical pivot that's reshaping who benefits from AI Capex.
Right. Lumentum announced a VCSEL-based optical interconnect platform. That's vertical cavity surface emitting lasers. And those demos raised questions about whether pure silicon photonics can meet the thermal and bandwidth demands of next-gen AI chips.
Which, honestly, I was a bit surprised by this one. A lot of the market had been betting on silicon photonics as the default path for AI interconnects. Now vendors emphasizing lasers and optical engines are getting new attention.
Analysts pointed to several vendors, names like Lumentum and others, and flagged POET Technologies as emblematic of a reassessment. The takeaway? Conference technical validation can quickly reshuffle supplier hierarchies.
Short reaction.
Big implications for supply chains.
Right, and the other thing is, supply constraints matter. If demand surges and suppliers need time to scale, prices can move up. That feeds back into the inflation story Powell flagged.
Let's talk about earnings and sentiment, because the day was also full of those disconnects. Microsoft slid despite strong operating results. Oracle pulled back amid concentration concerns tied to large AI customers. And Weibo had a mixed quarter.
For Weibo, they reported revenue of about $473 million, beating estimates by roughly $29 million, but non-GAAP earnings per share were 25 cents, missing by about 7 cents. That's a classic top-line beat with margin pressure.
Yeah. Markets were quick to punish names where future cash flow narratives looked uncertain, or where a single customer seemed too large. Oracle's drop was a reminder that customer concentration can become a valuation risk.
Which is simple to explain. If a material chunk of growth depends on one customer, any change in that relationship, repricing, churn, creates downside risk for expected earnings. Analysts note that markets assign a premium for diversified revenue streams.
And Microsoft's situation shows that even solid current results don't immunize a stock from broader macro repricing. The market is forward-looking and cares a lot about the timing of AI revenue realization and capex cadence.
Now, corporate news flow was pretty busy too. Disney announced a CEO succession, with Josh D'Amaro stepping in. There were a bunch of 8K filings, some sizable, that could contain material operational details investors will parse over the coming sessions.
Right. For example, one filing was about 7 megabytes, and another showed exhibits around 900 kilobytes. Not huge numbers in isolation, but filings that size often include detailed disclosures. Event-driven traders should read the exhibits carefully.
Okay, let's pause and tie these threads together. Powell says AI capex could be inflationary. The supply chain is shifting. Lasers and VCSELs are getting attention. Tech stocks are being repriced on narratives. What does that mean for different investors?
For macro and fixed income investors, the message was pretty clear. Monitor Capex indicators because persistent data center spending can keep yields elevated. Analysts noted that PPI surprises and an oil price bump reinforce the Fed's point.
Growth and infrastructure investors should be tracking product validation events, design wins, bookings, lead times, and gross margins at component suppliers. Those are early signs of who's actually benefiting from the AI Capex wave.
Large cap tech holders need to watch concentration disclosures and guidance language. The MSFT and ORCL moves show the market can penalize perceived concentration, even when current fundamentals look fine.
And for cyclical names, home builders included, this higher for longer language was painful. D.R. Horton had been down about 16% over 6 months to roughly $142 and change. And that kind of sensitivity maps right back to rate path expectations.
Short reactions. Yeah, that tracks.
Let's explain in plain terms how AI Capex can be inflationary for listeners who want a straightforward picture. Data centers aren't just racks of servers. They require GPUs and ASICs, high-performance networking, specialized cooling, and robust power infrastructure. Large, synchronized spending lifts demand across components that can't instantly ramp supply.
Exactly. That means memory and chips see pressure, optical components see pressure, construction crews get scarce, and labor and energy costs can go up. Those are second-round effects that can show up in core inflation readings, which complicates the Fed's path back to easier policy.
So what are the clear watch points? The signals that tell you this Capex is actually feeding into inflation or not?
Track hyperscaler Capex guidance, supplier backlog and lead times, bookings at optical and server vendors, and data center power projects. If those metrics accelerate, it suggests persistent input demand and limited supply elasticity, which would support the Fed's higher for longer language.
And on the tech side, keep an eye on conference demos and design wins. That's where you get technical validation. Of course, we're not giving advice here. Analysts note these are monitoring points, not a recipe for decisions.
Good reminder. Also, don't ignore customer concentration details in filings and call comments. When a single customer is driving a lot of growth assumptions, that's an active risk factor the market will price.
Quick lighter note, we did see some market humor today, right? The industry pivoting from silicon photonics felt a bit like a movie sequel nobody asked for.
True. But jokes aside, technical validation matters. When the hardware story changes, supplier winners and losers can shift quickly. That's why conference takeaways moved markets.
We've covered a lot. Let's end with 3 clear takeaways for listeners.
First, Powell's comments made AI Capex an explicit macro variable. That raises the odds policy stays tighter for longer if spending sustains input price pressure.
Second, the AI infrastructure supply chain is in flux. Silicon photonics is being reassessed, and alternative optical approaches like VCSELs got attention. Technical validation and supplier design wins will matter a lot.
Third, market moves showed sentiment can decouple from current fundamentals. Customer concentration and forward-looking Capex trajectories are driving re-ratings in big tech and software stocks.
Final practical notes. Monitor Capex indicators, read corporate filings for concentration and material exhibits, and watch PPI and energy moves for Fed signaling. Analysts note active monitoring here is important given the uncertainty.
Quick reminder, this is informational only. We're not recommending any buys or sells. The data and commentary are meant to help listeners think about market dynamics and risk.
Great, that's our recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. And don't forget, you can use the Q&A feature there to send us your follow-up questions.
Thanks for listening. We'll be back after the next trading day close with more analysis and takeaways.